Trading is all about execution. When it comes to executing your trade ideas you've created using technical analysis, this is now when we go into the realm of trading psychology. The most successful traders, they have understood that profitable trading has more to do with your approach to the market from a mental point of view. What is mental edge? Let me put it this way. You will arrive at consistent profitability when you successfully merge your trading system technical edge with your mental edge. You're never going to be able to tap or achieve that flow state of mind on a consistent basis without really mastering trading psychology. Trading a zone, at least that's like my trading Bible, if you will. I'm going to present a list of principles based on the core principles trading the zone. Remember that the goal as a profitable trader is always to function from the right mindset. Why psychology matters in trading. So trading is much more than technical analysis. I always say TA is easy, trading is hard. And what I mean by that is it's quite easy to identify a trend. Okay, it's quite easy to identify an uptrend. It's higher highs and higher lows. If you look for higher highs and higher lows, you go in the break and retest. It's super simple. When you first start trading, you go through the learning phase. And in the learning phase, the most important thing is technical analysis. But then you go into the trading phase. So first you learn how to trade and you probably develop a technical system. At that point, you're not really focused on trading psychology. But then when you have a system and you go into live markets and you actually start trading, now you go into the trading phase and technical analysis will not matter as much. Now what matters is trading psychology. And trading is all about execution. So when it comes to executing your trade ideas that you've created using technical analysis, this is now when we go into the realm of trading psychology. And the most successful traders, they have understood that profitable trading has more to do with your approach to the market from a mental point of view. And they have figured out that once you have that technical system in place, it's time to focus on your mental edge. So what is mental edge? Now, let me put it this way. You will arrive at consistent profitability when you successfully merge your trading system technical edge with your mental edge. And there needs to be a balance between these two. So this is why you want to have a trading system that fits your personality. It's very, very important that the way you're trading, the system that you're trading should fit your personality and your psychological profile. So if you're trading a style that you can't relate to, it's going to be very difficult to find the balance between that system's edge and your mental edge. And this is crucial for success in trading. As you can see right here, it says trading can be very stressful. And I would like to say trading is very stressful because most of the mistakes we make in the markets are mental-based errors fueled by emotions like fear and especially different types of stress. So this is why you have to pay attention to trading psychology. And you need to listen to your own emotions and you need to get to know yourself on a deeper level. This is the single most important aspect of your trading career, and it's going to be an ever-evolving process. It will get easier with time, but it's always going to be a challenge. It's always going to be somewhat of a struggle. We're all humans. We're driven by emotions, right? So you can never let that guard down. Always be on the lookout for mental errors. So we have 10%, 20%, and 70%. So if I were to ask you, let's divide trading up into three different parts where you have, first you have trading psychology, and then you have technical analysis, and then you have risk management. Where would you put these two in the order of importance? I think most of you watching this is understanding what I'm trying to say here. In terms of these three things, I would say that technical analysis is only about 10% of your trading, while risk management would make up about 20% of your trading. Trading psychology is about 7% of your trading success. So in the beginning, it's kind of the other way around. When you develop a system, it's like TA is is 70%, risk management 20, and trading psychology 10. But then when you start trading live, you flip that around. When you have a system in place, you flip it around because now psychology is the most important thing. The flow state of mind. And we had someone mention Trading in the Zone. Trading in the Zone is a great book to navigate psychology, and I absolutely agree with that. And this whole presentation is actually inspired by Trading in the Zone. So Trading in the Zone by Mark Douglas, a fantastic book on trading psychology. I read that book almost, I think like 4 times a year. I read that book. I got it on audiobook and I read it when I'm out on a run, listen to it. Really good book. And it's really what has made me the trader I am today. So in Trading in the Zone, he talks about the flow state of mind, and more importantly, the intuitive stage of trading, the last stage of trading. And to achieve that flow state of mind and to achieve that intuitive stage where you're not making mistakes like the one I did with EuroCAD, right? You see trades that are like, yeah, I'm just going to effortlessly put in my orders and I'm going to leave and I have my plan and I'm going to follow my plan and just be in the flow. Like there's nothing that can happen in the market from this point on that can affect me emotionally because I've entered the trade, I got my plan, and I've accepted the risk fully. Now, to enter the intuitive stage of trading is never going to be possible to achieve without being able to tap into that flow state of mind regularly. And you're never going to be able to tap or achieve that flow state of mind on a consistent basis without really mastering trading psychology. And that's why psychology matters in trading. There's a lot of people out there who says like, yeah, psychology doesn't matter, you just follow your system. I don't know, maybe they're psychopaths, I don't know, but psychology matters in trading. If you say otherwise, I simply cannot agree with you, because from my own experience, it absolutely matters 100%. Right, let's talk about some dangers of mental mistakes and how to fix them. So it's not only about the negative emotions, okay? It's very important to understand here that trading psychology is focusing on or taking care of your negative emotions. Positive and happy feelings, like happy feelings can be a problem in trading as well. Like euphoria can lead to, it doesn't have to be euphoria, just if you feel very happy, like today, for example, a good example, I took a lot of good trades. I'm up 4R on the day and I started feeling very good about that, right? And not that I'm euphoric, but I'm definitely positive about it. And that can easily lead to overconfidence. And that overconfidence might make you miss important details of the trade. And in the same way, anger and frustration will lead to revenge trading, which is the flip side. And that will also have the effect of making you miss important details of the trade. And like it says right here, balance between these two is key. So it's all about finding that balance. You basically need a good balance between the negative and the positive emotions, because trading is sort of like an emotional roller coaster, and you need to make sure that the emotional scale remains as even as possible, not to have these exaggerated emotions destroy your trading results. So it can go, very positive emotions or very negative emotions. Both will have the same effect on your trading, just in different ways. So make sure you stay balanced. And a great way of managing your emotions is to manage your expectations. So when it comes to trading, you need to be able to function from a probabilistic mindset. This basically means that every trade you take on an individual level has a completely random outcome. But when you have many trades, you can see consistent results. So from a completely random process, you can get consistently positive results. Now, like I mentioned before, if you haven't read the book Trading in the Zone by Mark Douglas yet, I highly recommend that you do. And you could view this presentation as sort of an introduction to trading psychology, while that book will dive deep into what it's all about. And to create routines and habits with the mindset that Trading in the Zone will set you up as a good trader. Now, there's read probably 20 books on trading psychology, and basically all of them say the same stuff as in Trading in the Zone, is in different ways. So Trading in the Zone, at least that's like my trading Bible, if you will. So I'm gonna present a list of principles based on the core principles in Trading in the Zone, and these principles are based or created to help you manage your emotions and expectations. So before we go into the rest, remember that the goal as a profitable trader is always to function from the right mindset, and that is a mindset of probabilistic thinking. So let's go first. Number 1, I know that anything can happen. So these are if you go through this list before you take a trade, you should at least somewhat be setting up to enter that flow state of mind. All right, anything can happen. Now, this is the approach that you need to have before each trade. So every new individual trade has a completely random outcome, and you have no idea what that outcome will. And also repeat, I don't need to know what will happen next. To be a consistently profitable trader, you don't need to know what will happen next. No one can predict the future, and if you think you know what will happen, you're simply wrong and you're functioning from the wrong type of mindset. Number 3, every trade has a random distribution of wins and losses. Every trade where your edge is visible, you have a completely random distribution of wins and losses. And the idea of having a probabilistic mindset is to understand that it's still possible to have consistent results by taking trades where the outcome is completely random. Now, think about how a casino makes money. How does a casino make money constantly? Now, the outcome of every individual game is basically random, but the house always wins because they have a small edge over the gambler, right? And you don't need to know who will win the next game. I mean, that's going to be impossible. Who's going to win the next game? You don't know, but you know who's going to win over the course of 100 games or 1,000 games. The house always wins in a casino. You want to be the casino. A trader that functions from the right mindset always wins in the market with a big enough sample size of trades. Number 4, I objectively identify my edge. Every moment in the market is unique. Every new trade opportunity has a completely random outcome, as we've already talked about. Now, given these circumstances, you have to be completely objective when approaching your next trade. So your next trade has nothing to do with the outcome of your previous trades. So whenever you close a trade, you close that book and you start a new book, okay? And that new book would be the next trade, and they have nothing to do with each other because on a trade to trade basis, they're completely random, okay? Number 5, I completely accept the risk. Now, number 5 here is probably the most difficult thing to do. So there's more than money at stake most of the time. You know, you have to understand, what are you actually risking? You know, maybe you're afraid of being wrong. You're afraid of losing money. You know, you're afraid of adding just another loser to your trade journal. You want to have that win rate. You don't like. You're afraid of losing. There's a lot of fear and greed in trading. So these are some of the questions that you really have to ask yourself and figure out before you truly can accept the risk of the trade. Because some people say like, yeah, I'm risking 1 ARP. That's it. But what are you really risking? What emotions are you risking to feel if that trade becomes a loser? So ask yourself on a more personal and deep level, what are you actually risking? Because you need to fully and completely accept the risk of the trade, not to have emotions affect your decision making when being in the trade. So basically, yes, if you can't accept the risk of the trade, it's going to be very hard for you to manage that trade and follow the plan efficiently. And this leads me to point number 6. I follow the plan whatever happens. Always crucial that you follow the plan of the trade in every little detail. So you should always set up a detailed plan before entering the trade. And this plan is most likely going to be based on your trading system, right? And any changes to this system or to this plan needs to happen after exiting the trade, not while you're still in the trade. So any major changes has to happen after carefully analyzing. That is usually done during the week or the monthly trade reviews and your regular backtesting sessions. So from the point of entering the trade and exiting the trade, you're not supposed to do anything else than what's written in your trading plan. So EuroCAD, for example, set and forget trade. Did I set and forget? No, I changed the plan in the middle of the trade. And what happened? I haven't watched the chart, but it's probably looking pretty good if I stayed in it, right? Actually, you know what? Yeah, that's insane. Exactly what I'm saying is I changed the plan while being in the trade. That's not the right time to do so. Number 7, I constantly monitor myself for mental errors. For me, at least, personally, this is because I do have a good understanding of 1 to 6, but number 7 requires active participation, you know, it requires you to be active and really think about what you're thinking, you know. You always need to be high alert for any errors that you might make. Now, these errors are most likely based on psychological issues, so you have to make sure that you are balanced. Again, you need to find that balance. You need to be very balanced mentally. You need to make sure that if you lose the balance, go away from the screens, go away from your office, do something that will help you regain that. So as soon as you feel like you have an emotional imbalance, you have to take a break and pretty much reset.